In this video, I'm continuing the investor reaction series when it comes to Palantir stock. The first part was my extended analysis of a bearish outlook on Pltr. Check that out later if you haven't already. This time around, I'll be taking a look at a timely overview of Palantir stock's short interest, which could point toward an imminent Pltr breakout or not. I'll highlight key points, share my thoughts when I deem it necessary, and draw an ultimate conclusion based on the data presented. Let's go. And I did pre-highlight the article this time around to make presenting faster and editing easier. Here we go. Palantir, the perfect setup. Shares have depreciated by almost 45% in value since their January highs, but the downtrend might soon be over. And this is while the short interest in the name has dropped yet again. Short-side market participants are ignoring Palantir-specific bearish narratives that we've seen around in the media and other investing mediums. And some of these same short-side market participants are perhaps growing more bullish on the company instead of staying short, which is an encouraging sign for the company's long-side investors. So the short retreat, this is what the author brings up as a key point for a catalyst for Palantir stock going into the future. But first, here's an explanation of short interest and what it means for Pltr. The term denotes the total number of short positions that are open and are yet to be covered. A sharp rise in the short interest figure indicates that market participants have actively shorted a particular stock in the hopes that it would eventually decline in value. Conversely, a sharp drop in the figure indicates that market participants actively close their short positions as perhaps they forecast the stock to form a bottom and or rally going forward. Overall, it's a tool to gauge the market's sentiment. So for Palantir, short interest in the last cycle stood at 55.5 million shares, which was down 3.8% sequentially from the previous period. Palantir has 1.82 billion shares outstanding, which means that just a little over 3% of its total shares have been shorted at the end of this last cycle. And that percentage is hovering close to its multi-month lows, which in turn suggests that short-side market participants actively wound up their positions in Palantir. So here we have the graph. You will see both the short interest and percent of shares outstanding short have fallen off since a peak in mid-January when the stock was correspondingly at an all-time high. And we're now hovering around approximately 3%. And this data is coming from early April to mid-April, which is when it was last disseminated. Let's continue reading. I'll share my thoughts on the short interest in a bit. Until recently, investors were of the view that Palantir's short interest was artificially low because there weren't many shares available to short in the first place. This argument also covered that market participants would borrow and short Palantir's shares in much greater quantities once company insiders flooded the market with additional shares post the lockup expiration date. While it's true that there were only a few shares available for shorting between early December and January end, in fact only 15,000 shares were available for shorting on December 15th, 2020. So here's a graph for the Palantir short loan availability. You'll see over time there has been an increase in the number of shares available for shorting, and the fee rate has sequentially decreased. But in the following weeks, more of Palantir's shares became available for shorting purposes, and also the fee rate dropped, as I said, to just 0.25%. In other words, shorting Palantir became much easier. Yet, we see that Palantir's short interest has consistently declined over the recent weeks and months, highlighting the street's reduced interest to short the stock. Palantir is a thinly shorted name on a standalone basis and also by industry standards. Its short interest as a percentage of shares outstanding figure is vastly lower than its peers. Also, the fees involved with borrowing and shorting Palantir shares are significantly lower than some of the other mentioned names. All of this leads me to believe that even though shorting Palantir has become easier, a broad swath of market participants just isn't interested in shorting Palantir, at least not anymore. So here we are looking at the software application and infrastructure page for shorting activity and availability. The tickers are listed in the leftmost column and the shares outstanding short percentage is just to the right of that. And you'll see Palantir is all the way at the bottom with that very same 3%. So that brings us, of course, to the question, why are short side market participants avoiding Palantir? It's a risky short. Palantir shares have corrected by about 45% since mid-January, Analysts, on the other hand, aren't projecting a gloomy picture for the company and have actually maintained their revenue estimates for its fiscal year 2021. This disparity in resilient analyst estimates and its distressed stock price has resulted in a moderation in Palantir's value. Its one-year forward price-to-sales multiple, which factored in analyst revenue estimates for fiscal year 21, and the company's current stock price is close to its multi-month lows. This suggests that the stock may not fall much going forward, and that Palantir offers a poor risk-reward ratio for short side bets, at least for the time being. Now, this is surely an interesting point, especially about the analyst side of things and their estimates, as we see in these graphs below. Here we have the stock price, the revenue estimates, and the price-to-sales ratio 1 year out. But it's important to keep in mind that the point the author just made was around the analyst estimates, and analyst estimates can be wildly inaccurate. It depends who you are looking at, who you're taking your information from, and what information they are basing their expectations off of. Regardless, it's a salient point. Palantir is targeting growth in the commercial sector quite aggressively. The company is transitioning to a customer-friendly payment model to increase the initial affordability and the penetration of its platforms amongst small and medium-scale enterprises. Now, this is key. I've talked about it 1,000 times. The more Palantir can move downstream and reach mass market adoption with small-scale businesses, the higher it can drive its revenues. Palantir will be providing their platforms for free to major companies in key industries. The move should, ideally, further reduce the initial customer resistance and expand Palantir's footprint into more enterprises. That is in reference to Palantir Unlock, of course. Many would be surprised to know that the company has added just 14 new customers in the last 2 quarters. This sluggish customer growth has actually been a topic of discussion. Now, just to jump in here, Palantir has a target of 6,000 commercial clients to hit its total addressable market, or at least that which it outlined in its initial S1 filing. But I would just point to the fact that Palantir is not going to get all of those clients in 1 quarter. It's about iterating on and adding functionality to its key platforms as often as possible so that its clients can generate value and then return with greater contracts, which boosts the name of Palantir, which generates even more and more clients that seek out Palantir in search of that very same alpha. This is the flywheel that I've been talking about. I even made this graphic myself to illustrate it, but that's a long-term goal. Moving back to the article, by expanding its footprint in more enterprises with this move, the company addresses the sore point and positions itself for rapid customer base expansion. Of course, the extent of its paying customer growth and the associated revenue gains would depend on upsell offerings, its paywall structure, qualifying process, and its eventual conversion rate. This is a positive step in the right direction, and it stands to boost Palantir's commercial revenue once these free enterprise customers eventually start to convert. For the record, Palantir's commercial revenue accounted for about 41% of the company's total revenue in Q4 of last year. Keeping these factors in mind, that Palantir is fairly or even undervalued and that its finances are potentially at an inflection point, it would be very risky to short the stock at the current juncture. So let's move on to this last paragraph here, the takeaway from the author. If bears truly had a legitimate argument against Palantir and had a firm belief that the stock will continue to depreciate in value going forward, they would have actively initiated short positions in the name. Instead, we saw that market participants wound up their short positions in Palantir in the latest cycle. This suggests that the stock is fairly or maybe even undervalued for the time being, and it might not fall much further. And finally, these last 2 sentences here are not to be taken as financial advice. This is the author's bullish attitude and should be taken with a grain of salt, if you will. Investors with a long time horizon may want to consider accumulating the company's shares while they're still down. This is the perfect setup to buy into Palantir as its shares seem to be bottoming out. Now, of course, neither the author nor I know where Palantir's stock is headed, but personally, for some closing thoughts on my end, this is a very compelling argument for that of the short interest and its declining nature over time. It seems that not very many market participants, to use the author's term, are interested in shorting the company. That is a bullish sign. However, I'd like to point out that maybe it is for another reason other than the fact that Palantir Palantir is undervalued at this point, because I do think it is still hard to argue that Palantir is undervalued and deserving of a much higher valuation. It still needs to prove itself going forward. It is by no means deserving of $100 or so billion valuation at its current financial position. Anyway, my point is that maybe Palantir will forever not be well understood, and perhaps people are no longer interested in shorting the company because they completely do not understand it and do not want to take the time to understand it. After all, this is a difficult company to understand without doing immense research, so perhaps shorts are not interested in doing that research and they're cycling out of the stock. Anyway, that's a potential possibility. I'd love to hear your thoughts in the comments. So this was, of course, a bullish article in the time that the stock has been crushed. It's hard not to expect a turnaround sometime soon, and someone among us that is also expecting a turnaround is none other than Kevin O'Leary. I'm not going to play the clip because I know others already have, and I'm a little bit late on the pickup here, but Kevin O'Leary picked Palantir in the stock draft in the second round. He says the stock has been beaten down long enough and it's about time for a turnaround. He says data is invaluable and Palantir is data, so that's his bet. Anyway, I wanted to get this second part, this more bullish take on Palantir, or at least its stock, out to you guys. It's not as comprehensive as my first video in the series was, and I understand that it's actually more entertaining to see me dismantle a bearish argument, but I did want to bring the other side to the coin, at least at some point. So drop a like if you enjoyed it. Until next time.